All right, welcome in everybody. Hope you're having a great day. So today's supposed to be the day that we get the inflation, what is it, CPI report or whatever. And, you know, should we be worried about the CPI? I have no idea. I don't even know if it's come out. I think it probably has. Wham. It's just news, y'all. It's just news. And remember, in our world, news is noise. Let's write it down. I just remember stuff. News is noise. We don't care about the news. What I need to know, are you still going to Costco? Are you still going to Starbucks? Are you still going to Ross? Are you still buying Apple products? I got 2 new Apple iPhones in this week. Are you still going to use cable at home to watch Alabama get the crap beat out of them by Georgia? Are you still going to be using all those products and services? You still buying from Amazon? And if the answer is yes, then I'm still bullish, baby. And the news is noise. The news is there to distract you and me from making money. Now, if a report had come out today that inflation was, I don't know, 14%, that would have shocked the market probably, and everybody and their mama would have gone to sell. While you and I would say it's a beautiful day in the neighborhood, we would just been here to buy stuff because we are asset accumulators, because that in essence is the definition of wealth building. Wealth building is accumulation of assets. So on down moves where the world goes, oh crap, my portfolio is down 10% today, you and I relish that opportunity and go, hey, let's see if we've got a signal to purchase assets, because here we are, the asset accumulators, the people who control wealth. That is you and me. We put our money, our capital at risk in order to purchase assets. Now, we don't just purchase any asset. For example, we don't just purchase Starbucks. So say we were Starbucks investors and we're just buying Starbucks. What if Starbucks goes out of business tomorrow? Highly unlikely, but all of our money goes to zero. So we don't have individual stock risk because we don't trade individual stocks. If you are trading individual stocks, stop it. You are no Warren Buffett. I am no Warren Buffett. I can't pick good stocks. What I can pick is good groups of stocks. So over the last 10 years or so, technology has been on a tear. There's no doubt. People say, but Bobby, look at the dot-com bubble that happened in the year 2000. Ladies and gentlemen, the dot-com bubble of 2000, the NASDAQ per se, was populated with a bunch of dot-coms that had zero sales, that had zero assets, and they were all hype and fluff. You and I are now firmly ingrained into NASDAQ 100, the 102 companies that make up the NASDAQ 100. And trust me, people are still using Google today. We've got 2 Google companies that are in the NASDAQ 100. People are still buying Starbucks. People are still going to Costco. People are still buying stuff from Amazon. There's no reason to panic. These companies have real revenue. These companies have real balance sheets. These companies are going to be fine. And if they're not going to be fine, their little arses will be kicked out of the NASDAQ 100 and replaced with more up-and-coming companies. This isn't your pet.com tech bubble, all right? And you can certainly disagree with me, but these aren't the pets.com, all those .coms of the year 2000. These are real, tangible companies that have real, tangible sales. Amazon is going to do just fine as long as Beth is living. As long as my wife is living, trust me, we need to have some exposure to Amazon. But are we going to go straight and buy Amazon or trade options on Amazon? Oh, heck to the no. We're going to do it in an ETF. So we chose the Qs. But then you and I said, hey, what's this? Hold my yoo-hoo. We're going to go 3x leverage of these things, and we're going to do what they say can't be done. So anyone watching today needs to realize that the plan that I'm proposing is risky. It is very, very risky. You have risk. And yes, looking forward, have I violated every bias known to man? Have I violated the recency bias? Yes. Have I violated confirmation bias? Yes. Trust me. But all I got to do is look over the 102 companies that are in this particular ETF and go, I think we're okay. I don't care what inflation is, because guess what? If inflation is there, well, people are still going to be in these particular things. Let's see. I told you I was going to, here we go, product details. Let's just look at them again. We can't do this too many times. If you ever start getting cold feet, right, we need to go, well, I don't know, baby. So let's see where where's my QQQ at? Unbelievable. Q, where's it at? Q, R, S, T, V. God, what the crap? Let me go back. I think I'd have this pulled up. And I told you I was going to save this. So Invesco, here we go, QQQ. Let's do QQQ. See what's in our Qs. There we are. There's our Qs. We've got 102 companies. See if we can find out who is in there. Who is in our Qs? Here we go. Portfolio, top holdings, and let's view all. Let's go through it again. All right, so here we are. We're Apple's, we're Microsoft. I bought Microsoft product yesterday. I don't know if I needed to. I think I already had it, but I bought the Office 365 updated, whatever it was, for $92 on Amazon. NVIDIA, Cisco, Broadcom, Adobe. I tried to convert something to Adobe format a while ago, and that said, your trial has expired. You've got to now pay for Adobe. You evil capitalist pigs, you bastards. Intel, PayPal. My God, Beth pays for so much stuff. Every time I reconcile our bank statement, which is about every 4 or 5 years, I'll go through and there'll be 1,000 different PayPal things. And I go, Beth, you got to tell me what each one of these is. And she says, how do I know? I said, well, you got to log in, or otherwise I'll believe somebody's been, milking money from our account. So she'll have to go through. She gets so mad. And I'm like, you need to email me these every time you pay somebody with PayPal. Qualcomm, Texas Instruments. Look at this. Y'all see my calculator, my financial calculator? Look real big, made by Texas freaking Instruments. Huh? AMD, Intuit, Applied Materials, Micron, automatic data processing. We should look at some of these, what they are. Lam Research, who knows what that is? I don't know any of these. Marvel Technology. I'd like to think that's Marvel Comics, but I know it's not. But it would be exciting for that to be in here. Autodesk, we got some semiconductors. We got, I don't know what this is, Synopsys. We need to look at one of these a day and just make sure we understand what it is. Microchip Technology. They're wanting to microchip us. Paychecks. Zoom. I pay Zoom every month so you and I can get together. Because if I don't, our sessions can only be 45 minutes or they'll cut us off. So I have to pay Zoom. All right, what else we got here? We got Datadog. What the crap is a Datadog? I like it. We got Okta, DocuSign. I had to do some documents with DocuSign the other day. VeriSign, Skyworks, Plunk, Meta, which is Facebook. There's our 2 Googles. Netflix. By the way, the new Netflix show, well, it's not new, 7 seasons long, that Beth and I are watching is an Australian show called Offspring. And if you loved Ally McBeal, you're going to love Offspring. So I pay Netflix every freaking month. Now, I did just fire T-Mobile because, well, technically not fire them. 2 of my kids will have their phones with T-Mobile. Mine are going to be with Spectrum, which is Spectrum is Charter. Charter bought Spectrum or Spectrum bought Charter. I don't know. So I'm still, they providing the internet that you and I are communicating on today. Activision, Electronic Arts, that's the video games, y'all. Match Group. Isn't that the date people? Isn't that them? I don't know. I need to check. Sirius XM. We've got Howard Stern in our 100 companies we're in. Amazon, Tesla. Now, we don't like Tesla because it's an environmentally unfriendly company, and they get all that stuff from those batteries. It just destroys the land. Oh, it's horrible. And I drive something that's much more environmentally friendly, and that is a Ford prison van that burns on good, cheap, reliable. Well, it was cheap till Biden got president. Cheap, reliable gas. Starbucks, y'all. Beth has to go get her Starbucks all the time with 7 pumps. She gets a caramel macchiato hot with 7 pumps. Booking, Lucid, whatever that is. Airbnb, I would not stay in one of those because I think people plant cameras in those, but a lot of people like those. And I don't want people to see me naked and post that on Facebook. JD.com. The crap. Marriott. Are people going to hotels? Well, I hope so. I did a lot of work with Marriott when I worked with the federal government. O'Reilly, that's where you need to be buying your auto parts. Lululemon. I'm going to buy something from Lululemon one day. By the way, I bought me some workout pants and a shirt, and it's one of those fitting ones. It's supposed to make you have pecs. I look like 8B from Andy Griffith's show. Unbelievable. We got eBay in there. Best all-time buying stuff from eBay. eBay. We got Ross. Oh, I bought my look at this, my new little tube, my Stream Deck. That came from, because that allows me to hit one button and to be able to do stuff. So I bought that from eBay. Ross stores, I told you about that. Dollar Tree, y'all. You need to be going to the Dollar Tree. Pin-a-doo-doo. What the crap is that? Pin-a-doo-doo. We're in Pin-a-doo-doo and they didn't know it. Hey, I want y'all to go to your spouse or your significant other today, just cuddle up to them and say, honey, did you know we're in Pin-a-doo-doo? Huh? They'll have no idea that you're in Pin-a-doo-doo. Amgen, Intuitive Surgical, Gilead. Look at all this healthcare we're in. Moderna. You may be an anti-vaxxer or you may be a really big vaxxer. Who cares? We're in Moderna. Illumina, Vertex. Sounds like a disease, right? But we're in it. IDEX, Dexcom, anything with a Dex in it sounds good. Align Technology, what is that? That's probably braces or something, right? That's probably Invisalign. We're in Biogen, Cgen, PepsiCo, which is an inferior product to Coke, I admit, but tastes like baby powder. Costco, whatever this is. Keurig, Beth, Dr. Pepper. Monster Beverage, buy those things, baby. You can get them for $4 at the convenience store. And why anybody drink that garbage, I have no idea. But it's part of our consumer staples. Walgreens, right? If you need some birth control, you need to be picking it up at the Walgreens. Kraft Heinz, dump the Hunts, get the Heinz. I know we don't like John Kerry. I know some of you don't. I got you. But hey, help a brother out. It's 0.31% of our Qs. Then we got Honeywell, CSX, y'all. That's a flipping railroad. So my friend is a conductor at CSX. He's a train conductor. And he always lets me know how the economy's going. I'll say, dude, talk to me. He goes, we are wide open. Wide open. He says, we can't keep the trains going. He says, unbelievable. He said, we're just shipping. And I go, good, because you're 0.55% of my little portfolio here in the Keys. Cintas, Fastenal, Various, Copart, whatever these are, Exelon. Exelon sounds excellent to me. No idea what that is. American Electric Power and Xcel Energy. Now, y'all, if we are not diversified, I don't know who is. Look at us. Look at those names. Look at that. That make you feel a little better? So let's do this. Why don't we do, let's go back and let's look at our little pie chart and see where we're concentrating. So you and I, where are we? We are in, come on, baby, show us our little holdings. Where's that little pie chart? Oh, man, did I hit it too much? Let's go forward one time. Just kind of like looking at this. Oh, man. What was it? Exchange traded funds, fund holdings. Well, anyway. They had a little thing, a little bar chart that shows us, you know, what. Let's see if we go back one more. There's Rick coming in. Rick sleeping late. Unbelievable, Rick. Get up and get your day going. I'm picking Rick. If y'all don't know Rick, Rick just retired. So he can do whatever the heck he wants. All right, so here we go. Where's our phone? Anyway, so this is what I'm banking my my little future of this little thing. We've got great little companies. I think we're just fine. So let's go back and see how we're looking, baby. How we looking? So the market's up 0.33%. Who knows if the inflation numbers comes out? Who cares? Who cares? Yeah, I know my gas is more expensive. I know it. I know that my chicken is more expensive. I got you. But am I still buying it? Oh, heck to the yes. So I feel pretty good. So let's look at the E-minis up 0.20. The AD is a little stronger than yesterday. Still anemic. It is 5.9. And it is just kind of chilling out here for what we call the lunchtime chop. We are below the overnight high. We're below the cash open. We're below VWAP. We are above the hourly mid. We're above this pivot point, and we're above this pivot point, but we are below the opening 15-minute range. Over here, the NASDAQ up 0.38%. We're below VWAP. Volume is coming down as we expect it to into lunch. Not much to see here, just a regular old day. All right, let's go to our volume profile. That kind of gives us a cool look at the market and see how we're looking. Remember, in a world of chaos, the human brain searches for meaning. It searches for structure. It searches for patterns, and we normally see them on this chart. So we are in the butt zone. Call this the butt zone. How do you know it's a fair value zone? Because you see this little dash line. It's 50% line. This is called fairly priced, fair value zone. That's where we are right now. Where are we going? I told you yesterday that we're going here. That's where we're going. Why? Because this is the point of control, and we've got some gaps in here that we need to fill, right? It's like Stacey Abrams in Georgia. Stacey's got a few gaps that she needs to fill as well, right? She's got a gap or two. So, I mean, you can stick a chiclet through those teeth, but we got some gaps to fill. Oh, by the way, I had my dentist appointment the other day. Unbelievable the stuff they got to have done. So I was going to have the veneers put on, but they're like, I wouldn't do it. I just put on some braces and do the whitening. And I'm like, really? So she's got me thinking about braces. Can y'all imagine me with braces? That'll be fun. So here's oversold. Here's overbought for the fair butt value below. This is fairly fast. So we got all these little things that just repeat. So we're fairly priced. What am I in this market? Well, I think price will fluctuate. If we were to draw a cone, little price cone, it's probably going to do this for the upcoming days. How about that? So here's where we are. We're thinking the market's going to do this. All right, so let's erase that. Beth, are you back home, or is that a dog behind? Beth, she's working at school today. She's so good. She volunteers at school, gets her out of my hair for a little bit, gets her out of my hair. I know what you're thinking. You sure she ain't off with the Romeo somewhere? No, she trusts me. She's fine. No Romeo on the side. Of course, there was that guy when I was in the hospital kept saying, is Bobby dead yet? And I kept thinking, why does he want to know if I'm dead? He's trying to move in on Beth or something. All right, so let's look at this one, y'all. So look, we are fairly priced. It touched and went into a point of being overbought, but NASDAQ said, au contraire, Bobby knows this is overbought, so we need to get our little tails back into the fair value zone. So what would I be on this? I would probably be neutral to bearish for the next couple of days on NASDAQ. Isn't that cool? We would expect price to probably go back down to here and to fluctuate anywhere between this little fair value zone. Now, for those of you that are new to us, you probably say, this is hogwash, this is voodoo, I got it. But until you've watched it, and some of our old timers here, Rick and Ken and Matt Jollywally and Dwayne Drew have seen this for some time, and they'll tell you this is probably our greatest club in the O2 bag. I mean, it's just amazing how these levels work. All right, so anyone got questions? No questions on that. If you want to draw one and you're in our Discord room, Rick has done a fabulous little write-up on how to do these. If you want to do them on your own, you can do a search for Sweet Bobby and Voodoo on what is it called? YouTube, and you can find a video where we do those. All right, so that's it. So now let's look and see what kind of signal we're getting from the skew driver. Skew driver is at 54 today. Okay, let's put that in. 54. Today is the 12th in the year of our Lord 22. Sorry about that. What did I say? 54? Aha. Do these down. I don't know why that chart just didn't keep going. I got to learn how to do Excel one day. All right, so let's look at our chart. Aha. So we went from 64 to 54, which is exactly what we expect. And we still expect the market potentially to go neutral to bullish so that the screwdriver eventually goes back into this range. But keep in mind, this works best when it's at extremes. If you're up here, you're pretty much guaranteed that the market's going to go up in the next coming days. We're not quite there, but this is neutral to bullish on the market. Gotcha, screwdriver. And I'm not even going to ever credit anybody who comes up with anything again for fear of being subtle, or fear being subtle, fear being tired of being sick. By the way, Mr. Bertino has 14 days from whenever we started this to respond or to sue me. He's got my home address. He's got my phone number. He's got my children's names. He's got my social security number. He's got everything. So basically, I sent all the information to YouTube and I said, bring it on, brother. Bring it on. I like my lawyers better than I like your lawyers. So come on, come at me. All right. All right, so let's look now at our, I've been sued so much. Look, I'll never forget, this is why I got out of real estate. I was in real estate big. We go to foreclosures and we buy them at steps. We did all that. I was going to have my own TV show. I thought I was Mr. Real Estate. And so we rented this place out. Beth just texted me, JoJo is at lunch at the school inviting everybody to Emma's party. I don't invite people to our kids' parties because I don't want them to invite ours. It starts a horrible, vicious cycle. If you ever get or go to somebody's kid's birthday party, oh, it's a McDonald's Happy Meal, Chuck E. Cheese hell's what it is. And you go there and you're miserable the whole time. And the kids are just nasty and they're just all over the place. And then if they come to yours, they expect that you're going to come to theirs. And it's just a never ending cycle. And it doesn't stop till your kids are like 22 years old. So I tell Beth, I said, don't invite anybody to the parties, y'all. I mean, let's just go to McDonald's and eat ourselves, let them play on the playground. We do not need to invite people. And you start inviting them, sure enough, God is my witness. Next Saturday, you'll be booked at Chuck E. Cheese. It's just horrible. And y'all know, some of y'all know what I'm talking about. It's just horrible. Did Berto send you a cease and desist letter? Not a cease and desist. It's just, I got something through Facebook, though, that said, you know, I had to provide him and Facebook my name, my address, my phone number. I really did. My address, where I live, everything. So that if they do sue me, they'll have a place to process the papers. But they've got 14 days to do it. That's what the thing from Facebook said. So, whang, bring it on, Jack. Bring it on. So, trying to shut us down. Come on, man. Leave me alone. You can still charge $6,000 for your course. Ken's going to take your course, for God's sake. I was trying to drive people to it. But you can't be nice to anybody nowadays. Because he's got more information than I do. He's smarter than I am. He's just not meaner than I am. I promise you, I'm meaner than he is. I bet he's never been locked up in jail in 2 states before. Ha, ha, ha. Got the badge, been there. Huh? Yeah, I'm a brawler. It doesn't matter to me. Y'all, come on. All right, anyway. Not to be sweet and sour today. Let's just be totally sweet. So what was I talking about? We was talking about Chuck E. Cheese. Oh, man, I was talking about something. Anyway, oh, I was going to show y'all this too. So this doesn't panic you, okay? So I got an email this morning. Oh, hello, Bobby Ray. This is what it said in from Futures Margin. Look at this. Hello, Bobby Ray. Due to the changes in the value of the positions in your futures account at Schwab, there it is, Charles Schwab. Your account has been issued a futures margin call. The call is due today, you fat black glass wearing, spam wearing, 9-toed son of a gun, and must be met by either liquidating a portion of your equity or futures positions, blah, 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 blah. So, you know, when you get these things, just don't go, oh, I got to panic. I got to close my account down. No one panic. And that's why I wanted to show y'all this. I want you to show y'all this so you don't panic, right? Nobody panics. Nobody gets, you know, That happened to you too, huh? You just ignored the letter. Okay, so we'll see if they see me. I don't know. We'll see. Here's what I want. I want them to put my doggone Sweet Bobby Hedge video back on YouTube. So I got this in the mail and I started looking, and I can't figure out, my buying power is fine. So who knows if they'll let me trade today? But I don't think I've really got a margin call, even though I got a letter saying I got a margin call, because it says I've got available buying power. But we'll see. If I start to put it on the trade and it won't let me, I'll go, oh, then I got to close things. But what I want you to take away, your takeaway should be this: don't panic. Life is good. Life is good. All right. So with the market move up today, I've got a couple of GTC orders working. Let's see how quick they are. Look at this, y'all. I am 10 cents away from buying or harvesting. Someone had a question about that on YouTube yesterday. Harvesting means you're closing an existing position. I'm harvesting a short. So something that I sold for $3, I'm able to harvest for 20. And that's what this is. Okay. Then we're trying to buy a new position. This is a GTC to open a new position, to buy 5, and I'm only a quarter away from that. So once these 2 orders fill, I will be able to sell an additional 3 puts on a good down day. Now, here's what my tendency was last year. Oh gosh, we're at 20 and 30. What if the market goes down tomorrow? And so what I would do is I would go ahead and change this. I'd cancel replace and move it up to 30. I'm going to try not to do that this year. I'm going to try to be more patient and to follow the plan. What is the plan, Bobby? You harvest these at 20 cents. If you don't harvest it at 20, where do you harvest it at? Well, I'll harvest it regardless between 21 and 14 days. Why? Because I want the gamma risk, which is gamma is nothing more than the acceleration of delta. So I'll close those so that I don't have gamma risk between 14 and 21 days. Currently, this is at 37 days out, so everything is working fine. This is a decaying asset. This is like you give a fat kid a candy bar. Their teeth's going to rot out, right? So this thing is decaying. All right, so we're really close. This is going to really make my hedges look a lot better. Do you also close the longs at 14 to 21 days? That's a great question, John. No. Your job is to let every long expire. You just let it expire. Unless we get the crash event and then those longs are worth mega money and then we close them. Yeah, good question. So yeah, so the longs are your protection. So just let those decay until the end, unless we get a super, super big move to the downside and they're actually worth something. Then we'll, but yeah, otherwise you just let those expire. All right, so this is good, y'all. We're all getting into the strategy. We're all getting the strategy. And this isn't something that you can watch just one time and go, I got it, baby. It takes repetition. It takes us doing this over and over and over and over again. All right, so let's just see how we're overall doing. So first we're going to look at the forest before we look at the trees. So let's look at our little forest here. Remember, our deltas are positive because we have positive deltas from our core position, which is the TQQ. Bobby, I ain't sure about that TQQ. Okay, I got you. I'm not trying to convince you. It's just what I'm doing. So how about you do the Qs if you don't want to do triple leverage, or do UPRO if you want 3x leverage, or do 2x leverage NASDAQ. There's 2x. I don't know what it's called. It's some QQQ, but you could do the 2x leverage. I'm doing leverage on steroids. I'm doing the 3x leverage of the TQQs. And today it's doing really, really good. And we're up $3,700 on our overall thingy. We're up $441 today. So remember, this is going to be your delta driver. And make sure that you click SPY weighted and you're weighted to SPY. If you don't, these numbers will not be comparable. See how it changes everything? And you'll go, oh my gosh, I'm 621 long. No, you're not. You got to beta weight that so you know what you are, SPY beta weight. All right. So we want this to be slightly less than that, not too much less. It will be less because we've got some hedges in here. TMF is a hedge, it gives us negative delta. That's triple leverage bonds. Then we've got our VIX hedges that give us a little there. And look at there, our Black Swan hedges are giving us a little bit of positive delta, which is kind of interesting. And we've got our micros that are giving us a little bit of negative delta, and that's even interesting. So this is fine. Now, what about your theta? Theta is time decay, y'all. So theoretically, this means that the amount of theta, all things equal, I should be making $20 a day on my account. But that's not the income driver. So here's our rule on theta. We want theta to be 0 or greater. 0 or greater. We just don't like having negative theta. Oh, Bobby, what if my theta is negative today? Well, don't panic. It's just that we need to put on trades to make sure that that's not going to be a hindrance or an impediment to our account going up. We don't want to have decay working against us. So if positive theta means that I've got positive decay. So as options decay, I'm making $20.40. Now, here's the problem with that you don't normally keep the total amount of $20 a day. Tasty Trade has found out that you're going to keep about 4 or 25% of that, right? So times 0.25, that's only going to be 5, right? So theoretically, I'm making $5 a day that I'll actually keep from my theta. That's the amount that you can expect to keep, good and bad. Okay, we just don't want it negative. Now, this is entirely different than what we did at the beginning of 2021. We were all theta engine. We were all about the theta. Right now, we just don't want theta to burn us. Then Vega. So what is Vega? So Vega is your volatility risk. And if you have a negative, this means that if volatility goes up 1%, you lose $144. If volatility goes up 2%, you lose $288. Everybody see how that works? That's what volatility is. That's what your Vega risk is. So what we want is our Vega. If we're selling options, we're normally negative Vega. And we just don't want this to be too big. Now, there are, in my others that we had last year, I had Delta Vega ratios and all that we were monitoring. We don't monitor that anymore. We just kind of look at this and go, you know, Vega is just part of doing business here. We don't want it to be too big. What is too big? It's a good question. I think if we're following our plan and putting on our Sweet Bobby hedges at opportune times, we're harvesting, we're buying the 5 replacement loans under our short 3, I don't think we're going to have much to worry with. And then where you go, and remember I told you I didn't want to rely as much on this time, but you go to the Analyze tab. Go to the Analyze tab. Let's do it real quick. Like 4 vol steps. We're going to pump this up to 15. Why 15? Because that's where I, in my experience, believe vol will be on a 20% down crash. And I'm looking to make sure that I don't go out of business if the market crashes 20%. So let's see what that looks like. 20% down. It's closer. Move this out. Come here, Bob. Oh, Bobby, oh, Bob. So right here, let me hide any simulations that are in there. So right here, if we have a 20% crash, my hedge should make me $41,000. Did everybody see that number down here? 41,000. Okay. But if you bring in, it's going to hurt a little bit, bringing in my portfolio beta weighted, if we go down, oh, I'm down 38,000. Everybody see that? That doesn't look good, right, in our entire portfolio. And this is where I normally go, oh, I've got to make this better. And I'll go over here and I'll fill that one, you know, no. So, but now I'm saying, you know, I'm kind of watching this thing. I could take risk off. There's a lot of things I could do if we have a sudden drop. So I'm not that concerned about it. But I just want to make sure that my hedges are there. Do I need these 2 things to fill? Yes, my 2 orders here, absolutely. I need these 2 things to fill to order to pop that back up. But I'm not panicking, right? If I lose 38,000 on a $50,000 account, am I out of business? No. No. Probably a little more risk than I need to. So on a good day, I could buy a whole new tranche to pop this up. I could buy 3.5 today, right? The market's up. I could buy 3.5 Sweet Bobby hedge. I'm just not going to. Because why? I'm looking at tea leaves. I'm looking at things. I feel comfortable with the risk. You've got to feel comfortable with the risk that you got on. Keep in mind, if you and I take no risk, we make no money. Everybody wants something for nothing, and it ain't out there. It is not out there. We can try to print a cash machine as much as we can, but it ain't out there. It ain't out there. Uh-oh, y'all. Oh, it ain't happening yet. I started looking at something else. I'm wrong. So I started to say, uh-oh, the split already happened and we've got double our shares, but we don't yet. Now, yesterday, our TMF and TQQQ split, right? So we're not going to see the change until the 13th. So it split on the 11th. Today's the 12th. When we wake up tomorrow, you should have double the amount of shares. So we should have, what is that? 1734, right? 434 shares tomorrow. I can't even, I'm terrible with math. 362, 8 times 2, we'll have like 700 something shares of TMF. That should happen, I think, tomorrow. Really, really cool. All right, questions. The split comes tomorrow. And the good thing about that is when I want to sell covered calls, remember we've got rules on doing covered calls as well, then I'll be able to sell 4 covered calls because I'll have 400 and something shares rather than my 200 shares, rather than selling 2 covered calls. So everything's looking good today. We're up $500. All of our stuff together is up. We're doing good, but on the year, we're down about $3,000. Not a problem. All right, so let's go look at our little spreadsheeties and see what our spreadsheeties say. Anything today? Now, this isn't entirely correct either. It says that no, there's no action. That's what we're looking for. Do I need to buy or do I need to sell anything? No, I don't need to buy. Now, I kind of like going over here and seeing where it says I'm going to do a sale. So if we went to 160, would I be selling shares? Nope. If I went to 170, would I be sharing shares? Nope. If I went to 180, would I be sharing shares? Yep. So we got some movement happen before that happens. But you see, it says I've only got 1% cash. It's not entirely true because my spreadsheet I've not updated my net lick. So my net lick has gone up substantially since we last recorded them on the 7th. So, that cash may be wrong until you update your net lick. But here's what I wanted to show y'all about yesterday. This is so cool, y'all. I don't know why I didn't think about this before. So make sure it's working first. How come my price isn't vacillating or doing whatever it's supposed to do? Oh, man, it better be. Hold on a second. Let's see. It looks like my price is updated. Let's see what the price of my TQQs is right now. TQQs is, oh, darn it. Oh, and somebody come today. Oh, somebody wrote a big thing. Okay. Did Bertino ever place the TM symbol next to the term BSH in any form? I'm not sure. Did he ever say trademark over associated with the BSH? I don't think he ever did. I don't think he did either. So he never protected the name. And so document and screenshot anything to show that he did, and then you can take a picture of the middle finger. Oh, I'm such a terrible human sometimes. All right, what were we doing? I was doing something. I can't remember what was doing. Can't get me all sidetracked. Oh, we want to see what the price of TQQ was. And y'all, I'm out of Adderall. I've been out of it for about 3 weeks, and y'all can probably tell the difference. So when I get my Adderall, and I got to do it because my kids' Alabama classes start today, right? So I have teaching classes, and I gotta be on point. So I got to take my Adderall. All right, what were we saying? Oh, TQQ is 153.64. 153.64. And what does this thing say that TQQ is? Oh man, I was going to show y'all that my darn thing was working so good, and heck, it ain't even working. Unbelievable. Unbelievable. Let me close it and open it back up. Let's close it and open it back up. We'll save that and see if it works when I open it. Man, I had a great little thing going. Let's open it back up. There we go. Come on, baby. Come on, baby. Hit me one more time. Come on, baby. Oh, man. Why is it not working? Disclaimer, financial market provided as is. Well, dang it, do it. Now, I wonder, here's what I was going to show y'all that I did yesterday. Because this was kind of cool, and I thought it was going to work. Apparently, it's not. So over here, I've got a hidden column. Let me unhide it. Right click, unhide. Where's my unhide button? Dang it. Dang it. Hold on. Double click here, Bob. How do you get it on here? Unhide. Hold on. How embarrassing. Unhide. There we go. Unhide. So I don't want to hold the thing. Here we go. Unhide. Right click, Bob. Right click. Oh man, I know this is boring for y'all, but I had this all worked out. Where's my unhide button? Let's see. I remember it used to be able to do this. A2.
Bobby, try clicking on the B at the top of the column and then try the unhide.
Thank you so much. Darn it! Look, I mean, it ought to be doing it. Oh, there we go. There it is. Unhide. Here we go. There we go. Now I wanted to show y'all what I had in here and why I don't know why it's not working. So this was kind of cool that I put in. Now let's get this thing to work. We'll figure it out. All right. So you see how that cool thing is? It's got like, it looks like we're in Greece or something. Isn't that cool? It's got like the Parthenon or whatever that thing's called over there. And it's got these nice little deals over here. So what I did is I used data and then I clicked on stocks. And when I clicked on data, now it updated, you flipping thing. Why didn't you do that before? And then when I click on data and stocks, now let's see if it keeps updating. It should keep updating. But what I did is basically put in another little thing here. And you've got to type in QQQ, TQQQ. So type in whatever your symbol is. And then when you do that, I came over here and I did equals A2, right? So it references E2, A2, and then it gives you all this cool stuff that you can do with the stock. What's this? Equal A2, and then it shows you all the stuff in there. You can put the 52-week high, 52-week low, the change, look, all that kind of stuff on the stock that you can put in there. And so what I did is I did price, and then hit enter, and then it was updating the price. Now, it looks to me like, I wonder if I have to click on this disclaimer for it to say, hey, I'm gonna work for you, pal. How embarrassing. I thought I had this all worked out. All right, let's close that. So this thing should update with the current stock price. Not exactly sure why it's not. Let's try this one again. Let's see what happens if we hit it again. Because you don't want to come in and have to hit it every time. All right, that defeats the purpose. Here, 153.66, hit the stop. 153.73, yeah, it should update live. So I'll work on that. I'll get back on the horn, or I'll do a YouTube search and we'll figure out why that's not updated. If anybody knows, tell me. But I thought we had a great little fix for those of you that want to run this without having Thinkorswim running in the background. Because some of you don't trade on Thinkorswim. You're like, oh man. And too, there's probably, you can get this from Google Finance to put in the price of your stocks, but I don't like having to click that every time. So we'll figure out a way to make this thing, auto update. And it may be a thing that says, hey, it's going to update every minute or every 2 minutes. I don't know what it is. But
Bobby,
yeah.
This particular workaround that you have works only with Office 365.
Yeah.
If you're like me, I got Office Pro 19 or something like that, and it doesn't work. This is the difference. You'll start to see the Office, Microsoft is moving, they're splitting the outright purchase of Office, and they're going to subscription only. So all the cool features are going with Office 365. So if you're someone like me who outright owns Excel, purchase, this does not work. And so it'll drive you nuts until you find that out. As a result, I'm throwing in the towel. In March, I'm going to subscribe.
Yeah, and let me show y'all. I bought it yesterday too, right? Because now I get it through the University of Alabama gives me something, but I don't know if I've got all. And I was sitting there going, I don't want to use the University of Alabama stuff for my thing, so I subscribe my own. So let me do my orders here. I think if you go straight from Microsoft, I think it's $99, but I found it for $92. Here it is, $92. So I got the Microsoft 365 family, 12 months ago. So I can give it up to 6 people on my family, and it was $92.95 a year. Now, don't do the family if you just want it by yourself, right? So you can do the all by yourself. I think it's 60 something bucks, y'all, but I would think it's well worth it for us to have and what we're doing. And we'll figure out a way that we'll be able to, this thing should update. I was thinking it was going to give me live, data on that. And I'm not sure why that's, we'll figure it out. What happens if I right click? And well, we won't go into it. We'll refresh.
Go to the data bar. There should be refresh all data or refresh from the web. But you're there on that page. Yeah, there you are.
So, you know, and two, if it's just a matter of me going to data and hit refresh one time, yeah, there's refresh all, right? Refresh all. See what that does. I mean, if it's a matter of just doing that, I got no problem doing that every time I come in. Hey, so I'm trying to give y'all a workaround to do that. Now, here's how you do it, though. What you got to do this. So let's say you put in a simple AAPL, right? So you put in Apple. So then you got to go here and then click stops. Watch what it does. See that? Isn't that cool? So that's what it does. So that's how it recognizes, you know, the symbol. So all you got to do is go. So you've got the existing spreadsheet right now. So you just go right click and you're going to insert. So you're going to insert this and then put that in there. Now, here's the problem. Yeah, okay. And I think everything else is fine. It messed some of these things up. So I had to change cell references a little bit, but I don't want to overcomplicate that for you. If you want this, instead of, you know, popping into Thinkorswim, it's a good way to have it. And I was hoping that I could hide that. Let's see if I hide it. And if I refresh all, if it still updates these prices. So 153.40. So refresh all. Yeah. So it does do that. So, and two, I mean, that's all we're having. So if that's the workaround, is hitting data and refresh all, I got no problem doing that. And for a lot of you, that'll be a lot easier than opening Thinkorswim, waiting on that, you know, blah, blah, blah. And two, I don't even have live prices. Let's see if that's live, what it was, 153.73. Let's see, 153.71. So let's refresh all. 153.71. Yeah, so it'll give you the current price. It just may not change, right, from time to time. And
Bobby, it's a no-brainer to make
Yeah.
a macro. You can make a macro and assign it to an image file. You can click refresh right there on the screen so you can have it whenever you want.
Oh yeah, good. Oh, and I was going to show you something else, Ken, that you'll like this about it too, right? So if I unhide that, what's this? Check this, y'all. If you want to check on anything on this, what's this? Just click on it there. Let's see, double click. I thought it was going to do. Let's see, click here. Where's my little thing? It would normally, yeah, here it is. See if that does that. Yesterday when I was doing this, I click on it and it would give me all the information about the ticker. Now it's not working. Of course, you know, when you're live in front of everybody, it wants to show us. But yesterday it was really cool. I would just click on it and it would open up and it'd show me how many shares have been traded. It'd show me the current price, the high and the low. And of course, now as I hover over it, and doing check. All right, that's fine. We see how you're going to be there, Mr. Excel. So I'll hide that again. All right. Hey, did that update again? I thought it did. All right, so here we go. So we got a workaround. I'm gonna figure out why I can get that to do, keep it live all the time. All right, so where are we at now? All right, it's 12:51. So now we got to go to the other account and we got to do us a 111 trade. So let's do that. Got no signals today, so I do these in the micros. Do you have to do them every day? No. Do you have to do them on up days? No. If you don't want to, do them on just down days. That's when it's optimal to do them. But as long as I've got buying power, I'm going to put these on every day. All right, so here we go. So we're going to trade. We're going to trade the table. We go closest to 60 days without going down. If you want to do 45 days, closest 45, do 45. So I'm going to go 47. Ba-ding, ba-ding. We're going to do a long put vertical. Ba-ding, ba-ding. We're going to make him 50 points wide. And we're going to move him down. He's going to get hung. I'm going to move him down again. He's going to get hung. Move him down again. Why am I moving them down? Because I want this to go down to $10. Actually, I want it to go down to $9.75, right? So we'll go down again, go down again, go down again, go down again. So now we're at $10.75. Make sure we're still 50. All right, so we're going to go to $9.75 because I want to buy it for 10. Now, I would not buy one here. Everybody sees why. I'm short 2 here. So I'm not going to buy one where I'm already short one. Okay? I don't want to do that. Now you could, but why? That's just complicated for me. I want to keep all my 111s intact. So I'll go down again. This one down. So I wouldn't do it here either, right? So I got to go move down one more. There we go, 950. Let's move it up to 975. Feel it's in. Let's see if we can feel. Voila. There we go. So we're feeling. So then we're going to pay for that. And we're going to sell something around $20. It's 2025. I'll sell one there. Ba-ding. And then we like bragging and looking at our little fortress, right? So let's do that. Let's look at our analysis tab that looks at all of our little MES positions. These are all of our little 111 positions, and it is a sight to behold, y'all. Look at this. Look at it. I think today, instead of drawing it as I think I'm gonna draw it like Tom sees it. He sees this as an elephant, because let's see if I can draw that. So here's our elephant with his little snout, right? There's a little elephant, his little legs. Looks more like a dinosaur, doesn't it? There's his little tail, his little body, and there's his little snout. Everybody see the elephant? That is more an anteater, I think y'all are right, anteater. So we got a little anteater here, and we've got this wonderful little profit to the upside. Looks like if we go up, we're going to make an expiration, $1,600. That ain't bad. If the market goes up, what if the market goes down? $1,600. What if the market stays the same, $1,600? What if the market goes down? $1,670. Wait a minute, $3,000 at expiration, $5,600, $7,600. Market fall. $10,000, y'all, if the market comes down into this area. Isn't that cool? Now the problem is, if this happens in the S&P 500, there's a good chance that our TQQ positions are suffering. So everybody sees why we put these on. This is a grind down hedge against our TQQQ positions. And the more I think about it, the more I go, do we really need to be in TQQ? We probably, if we're going to compare apples to apples, it's probably better that we be in UPRO than TQQQ, because then we're all just about the S&P 500. We're not worried about NASDAQ and all that. So, if you're running this program on UPROs, I don't doubt you at all. I think that's a great plan, because then it's apples to apples. Right here, we know that the NASDAQ and the S&P 500 are highly correlated, but there could be some differences. One could be down, the other one be up on the day. It happens. But overall, I think this is a pretty good plan. So if you want to be UPRO because you just want to focus on the S&P 500 and keep it clean, do that. And don't do the TQs. I kind of like the TQs. Why do I like the TQQs? We talk about our biases that we have all the time. We have recency bias. And recency bias is we look at the recent events to see what we think will happen tomorrow. So if you look over the last 10 years, if you had bought TQQQ 10 years ago and UPRO 10 years ago, there's no doubt the TQs would have outdone SP 500. Doesn't mean that that's going to happen in the future. And so some of my personal biases do show up, and you guys need to realize that. I'm human. So my biases as to those 102 names of us being concentrated in those, we're probably taking a little more risk than if we were in a ETF that more closely resembled 500 companies. That would take us quite a while to go through. To me, though, it just seemed, based on my recency bias, confirmation biases, all these biases that I have, that we're in a good thing with TQs. Not necessarily so. All right, so we put on our little trade there. Now, let's go over and see if they're going to let me trade, since I've got a margin call in the other account. Oh, behave. Here we go. We'll see what's happening. If they're shutting it down. Maybe Ron Bertino is a stockholder in TD Ameritrade and Charles Schwab, and he's saying, shut him down, shut him down. I doubt it. So let's try to see if we can do this. I'm joking, I kid. Y'all know that. All right, here we go. Let me get this. I talked to one of my Alabama students today on the phone. She said, I got a feeling you're going to be my favorite professor. I said, girl, you have no idea. I said, don't judge too soon. Give me enough time to be off my medications, to be sweet and sour. All right, so where was that one we filled over here? We filled that one at 45.90. Let's go 45.90. 45.90. Isn't that cool that you can have somebody though that will admit their biases? I got no problem admitting that I have biases. You know, I'm a scientist at heart, but I'm an artist at other places. 44.90, 44.40. I don't know if that look right. $7, David. Did I get the right stripes?
I think you're doing the 44.90, so it's 45.90.
Rick, it is so good having you here all the time now because you keep me straight so many times. And we missed Rick the last 3 months, y'all. He was just working and slaving and just grinding. And now he's comfortably retired. Have you been on a vacation yet, Rick, or is every day vacation?
No, sir. Every day's a vacation. I'm on vacation day every day.
I love it. I was out showing my donkeys earlier. I got somebody that I think is going to buy my donkeys. They offered me $375, and I said, "How about 400, baby?" Okay. So they're gonna pick them up Saturday. Now the problem is, the old boy said this. He goes, "Yeah, I'll buy you donkeys, but you're gonna have to load them up." I said, "Hell, look at me! I can't load no donkeys. I'm barely getting them to come to me." So now I got to hire somebody. Probably, I'm gonna try to get my little redheaded girl. She turned 7 yesterday. I think she can get them stalled up by themselves because they're little skimmish, everybody. And then we'll try, but I mean, that ought to be a video we'll save. It's me trying to load donkeys up because donkeys, they do what they want to do. All right, what was the question here? Okay, David says, do you buy back the $20 so put at 20 on the 111? No. And let's talk about that. That's a great point. And let's talk about that. So remember these 111s, you got to do them in quarter increments. So I'm going to do that at 1125 so that we can get filled. And then let's talk about that. Let's see if it'll let me. And if it says, "Oh no, you've got a margin call, you son of a," see, I told y'all it was an error. I told y'all it was an error, or something may have happened overnight, you know, but my margin call is no longer there. So let's place that in its group. Someone asked on YouTube yesterday, "Hey Bob, how do you get your stuff in these nice little groups like that?" Well, you go over here and you click show groups. And so then you got to click on your thing. Well, y'all know I'm gonna have to make it smaller. And then let's answer David's question, because that's a great question. When do you harvest those? When do you harvest the short put on the 111s? I can't talk and do this at the same time. Give me just a second, y'all. All right, so here we go. And yesterday we did our 60th one of these. How many of these have lost? 0. We've got 0 losers on these. I keep thinking I don't need to do the Chris Collinsworth. Chris Collinsworth can do Sunday Night Football, and he'll say, "Can y'all believe it's been 18 games since Aaron Rodgers had an interception?" And I'll be danged if the next pass won't be an interception. So I'm not trying to pull a Chris Collinsworth, who is a horrible broadcaster. I remember watching him on when he played for the Bengals, and he was a good wide receiver. Y'all remember that? I mean, he went to the Super Bowl. I think they lost. What are we at? The 61st of these things? I think that's right. But, you know, he just gets on my nerves. Him and old Gary Danielson and, like I don't get on people's nerves. I know I do. Let's do this, and we'll talk about harvesting. All right, so large, extra large. Now let's talk about the harvest. My goal, David, when I put on a 111 trade is to let every one of them expire. That's my goal. Because I'll get to keep that little $60 credit or whatever that we put it on for. That's my goal. Now, when would I close one? Okay, here's one I would close one. If I'm out of buying power, right? If I don't have any buying power to put my new one on today, then I got to close them. And I try not to close them or to harvest them as long as, like, if I had negative theta today, no way I would harvest one. There is no way in heck that I would harvest one. So, but my theta is positive. So I could actually harvest some and take some of my risk off. Definitely I could. I'm kind of reading the tea leaves of the screwdriver, and I'm kind of reading the tea leaves of our big green monster and volume profiles and all, and I'm not really concerned on stuff. But you're exactly right. So if you have positive theta and you want to take risk off, definitely do it. And here's the way you do. So I could go out to 9 days, and these are mini little black swan hedges. I'm sorry, God, I'm Adderall, sweet Bobby hedges. What was I thinking? So let's go over here and look where my little put is. Where have I got a naked at? Naked. I was watching Karen Super Trader. Oh, I got her phone number. Y'all don't remind me. I'm gonna call her as soon as we're finished and see if we can have her on. Oh, I just think that would be great. I'd even put on loan britches if Karen come in. So look here, here's one that I sold for $20.75, right? I could close this thing for 55 cents right now. Why would you not do it and take the risk off? Well, you're right. But what's the probability that this thing's going to be in the money? 0.7%, less than 1%, y'all, that this thing's going to be in the money. And it's only got 9 days to go. And do you know what? If the market went down 100 points today, I could still close that for probably 70 cents. I mean, it's so far out that a big drop in the market's not going to mean a whole lot to this, but still it's taking up buying power. I mean, this thing's definitely taking up some buying power. I've got $101 profit on this particular option. So it has more than paid for the put debit spread. So David, what I would do is say, you know, if you are like one of you, I can't remember which one of you closes these things when they're at $2 or less. That's y'all rule. Write your rule in. Hey, when that thing gets down to $2, I'm closing it. I'm taking risk off. I love that. I think that's great. So create that rule or give yourself permission to. So I give myself permission. I'm not going to say, oh, I'm definitely closing it. You just got to evaluate your risk. Go to that analyze tab. Take risk off because, you know, that's part of my risk is some of these naked puts. But right
Bobby,
now, yeah.
At when you got 9 days to go, for instance, and they're so out of the money, you will find that the buying power gain that you get from buying back those shorts is hardly worth your effort. I was doing that back in late December for January, and I was looking to buy back 30 short puts, and my buying power change was $248. I said, well, forget it. You know,
Yeah,
forget
it's not a lot about her. And two, you know, to me, David and Ken, you know, to take that off right now, I'm leaving money on the table. Right?
Yeah, the transaction cost for me to clear off 30 contracts was I was going to maybe make $15.
Yeah.
So it wasn't worth the harvest. You know, if the buying power difference was bigger, then yeah, but I was in good shape, and it was a good lesson. You know, be patient, and that's why today has been a lot of on the chat questions about is it really worth doing the 111 over just a short put? The answer is absolutely yes. I mean, it gives stability to the position. It helps to balance out your buying power. I mean, it's one of the chief reasons I can sleep at night. It's an unbelievably good trade when you look at the entire big picture. And so the transaction cost of a long put spread is nothing compared to what it can give you. And so it's the same thing with this. Some of this risk does not have to be taken off the table. Be prepared because things do happen, but by and large, this is real easy. It's unbelievably easy, which scares me.
Yeah,
Like
you're kind of like, I remember Karen in the interview I was watching yesterday, she says, you know, maybe there's something out there that I'm not aware of that I should be concerned about, you know, and maybe I say the thing. I mean, y'all got to understand, I ain't the best trader in the world, y'all. I've done everything wrong. I missed the boat a lot of times. And maybe 2 years from now, we're going to go, can you believe the sweet butt strategy? How dumb that was that we went into a triple leverage TQQ and it just killed us. That day may come, I mean, who knows? But what we're doing is we at least have some bit of logic behind the strategy. There's logic behind the strategy. We've got an income trade. We've got an income trade with a hedge, which is the 111, which after you get several of these on, provide really, really good grind down protection. We've got a catastrophic protection in our VIX call hedges in our Sweet Bobby hedges. So we've got that going on. And then we've even got a hedge by holding a triple leverage bond fund, which in the event of a catastrophe where you're having to jump out of an airplane, provides you a little bit of an of a parachute. So we've got all these things. Tom was talking about in our group, don't be so concerned about the hedges. We over hedge a lot of times, and we're too focused on hedges. I agree. And he said, look, you've only had a couple of these big drops, but we had one in 2020, y'all. And I'm telling you, it changed my take on hedges because I'd never seen an account I never seen my account double, in a day. I never seen that. So double or triple in a day, 200% in a day, not 100%, 200%. So we got to be prepared for when those do. But yeah, don't get so caught up in it. As you saw, a 20% move looks like I got a $30,000 loss. That looks pretty bad. But at the same time, I can close some of those micros and still be profitable on those. Now, here's what I want to show you. P&L for the year. Look, we've lost $818 this year on TML. We have lost $2,200 on paper. These are all paper on TQQQs. We've lost on the VIX. We've lost on the Sweet Bobby hedge. The only thing that's made us money, look at this, is the 111. And we ain't had one of them to go against the shed. Chris Collinsworth. So, you gotta, all this works together. So if you're just doing the 111 trades, I wouldn't do just the 111. I'd make sure I have Sweet Bobby hedge to catch me if I fall. I might even do the VIX hedge. But what's your income driver? Because then if you got an income driver that's not something that we're holding shares on, we need to have a talk, because then you need to do something else. Then your theta needs to be significantly higher or you're not going to make any money. Our theta doesn't have to be higher because we've got this delta. This delta in a positive fashion overcomes the lack of theta that we have here. So our income is coming from delta and theta. Giving you a lot today. Are you concerned about the trading cost efficiencies, fees and commissions and premium collected with 111 versus selling naked put? Not at all. Not at all. Because I'm doing one every day. So what was the overall credit for that? Well, let's look at it today. Let's just say it's not a lot of money, y'all. I mean, let's just look at this. If this entire thing, create duplicate order, let's look at it. So it says $11.25. When the micros, that ain't a lot, y'all. So we got a credit of 51.84, right? We got a 51.84. So if this thing totally goes to expiration, the maximum amount of money I can make is $51.84. But pretty much all of them are going to expiration. So I'm making 51.84 times 5, making $250 a week on these, doing 5 of them a week. And it's taking me $2,500 in buying power, roughly, if I do these 5 days a week. $400, $500 worth of buying power. And if I have to close that option, well, I've got to pay some. No, I don't even look at my commissions on that. I mean, I'm glad to make 51.84. I'm more than happy with that because I've got 61 of these on now, assuming. A lot of them have already expired, but let's say if we've done 61 of them, not a one's lost money, you bring them all to expiration, that's 51.84. Got 45 more days on them, but 3,162. I like what it gives me. Because if I'm just selling the naked puts, you got to understand, I give up this. Here's what I give up. I give up this. You will not have a hump if you're just selling negative short puts. You're not going to have that at all. You're going to have something that's much more drastic to the downside immediately, right? This is why I'm doing the 111 rather than the short put. The short put is no longer my income driver. This is more of a hedge to me than it is an income trade, but it's a nice little income trade. It's a nice, consistent income trade. That's a great question. Now, John, that doesn't mean that I'm doing it right. And that's what I want y'all to know. Do you. Y'all do y'all. I'm presenting a strategy to you. I'm not trying to convince you. I'm really not. I don't care if you run it or not. why I'm on here is y'all keep me accountable to what I do. So I'm running this little strategy, overall strategy, and the 111 is part of it. Now, if I were not in the TQs, John, I'd probably be doing short puts, naked puts, 10 delta every day. Yeah. If I was not running the TQs or the U Pro or whatever you want to run as your income asset, absolutely. That's what I'd be doing. But since I have the TQs, I got to have some type of little buffer to help me in the event of a downfall. Good class today, y'all. And I think I'll name this one Chris Collinsworth Ain't No Trader or Ain't a Trader, something like that. Y'all have a good day. I'll see y'all tomorrow.